Thanks for taking the time to download this BBC Radio 5 Live podcast. To find other programmes you might be interested in, click bbc.co.uk/5live, where you'll also find our terms of use.
Good morning and welcome. This is Wake Up to Money with Mickey Clark and Andy Verity on BBC Radio 5 Live and Radio Ulster this Monday morning. Coming up in the next half hour, after England loses its fight to stay in the Euros, Greece battles to stay in the Eurozone another week. The new government's trying to renegotiate its bailout agreement, but will it succeed?
Yesterday, thousands of branches of RBS, Natwest and Ulster Bank opened their doors for the first time on a Sunday as the fallout from last week's technical glitch rolls on. When's it all going to end and how safe are the banking systems we rely on?
And as retailers face their quarterly rent bill, we'll look at whether more administrators will roll into town as the high street counts the cost of recession. We especially want to hear from you this morning if you've been affected by that technical glitch that Mickey was talking about. Some glitch to go on this long.
You're listening to Wake Up to Money, a podcast from BBC Radio 5 Live. For more information, go online.
bbc.co.uk/5live.
Germany booted Greece out of Europe over the weekend, but never mind the football. Will Germany show a bit more mercy on another international stage and help Greece stay in the Eurozone? It's a week since Greece's second general election of the year, and over the weekend the new coalition government set out its proposals for softening the terms of the country's bailout. The coalition parties, New Democracy, PASOK and Democratic Left, are to ask the so-called Troika of the European Union, the International Monetary Fund and the European Central Bank for 2 more years to implement the spending cuts imposed on them.
Sounds simple, doesn't it? But as always seems to be the case with Greece, things are far from straightforward. Representatives of the Troika were due to arrive in Athens today to negotiate, but their visit has been postponed until later in the week because 2 of the Greek government's top brass are recovering from illness.
The Prime Minister, Antonios Samaras, has had eye surgery, while the Finance Minister, Vasilis Rapanos, has been suffering from intense stomach pains, nausea and dizziness. All this comes ahead of the crucial 2-day European Union summit in Brussels at the end of the week. Let's talk to Dr. Dimitrios Styrakos, who's Senior Lecturer in Economics at Manchester Metropolitan Business School. Good morning.
Good morning.
So what exactly are these changes that the Greek government's going to be asking for? Shifting the timing a bit, essentially.
Yeah, that's exactly right. Initially, part of the first bailout agreement in spring 2010, well, if the recession is more severe than initially anticipated, then you get 1 year additionally to the agreement anyway. So what the government is trying to push the idea of another 1 + 2 years. So overall, you're looking at 2 to 3 years extending, implementing the fiscal cuts of the original plan.
And what about the Troika? Because they'll be the ones to decide, won't they, whether to accept that suggestion. Are they likely to accept it?
I think they may negotiate and accept 2 years on average extending of the policies that they need to be implemented. What the new Greek government is trying also to push forward with the negotiation with the Troika, part of the bailout agreement is that 150,000 people employed by the Greek public sector are going to be laid off.
Right.
And the initial understanding is that they have to be laid off quite soon, within the next 12 months. And the government is trying to either say we don't need to lay off so many people because of the severity of the recession, or if we have to, let it be spread out up to 2016 or 2017.
There has been tough talk, though, from the German finance minister, Wolfgang Schäuble, who suggested yesterday that Greece should just get on with that. How do you assess that?
I think eventually what the Greek government is going to get is only an extension 2 years of the bailout agreement. I think people eventually have to be laid off by the Greek public sector, and I think the Germans are going to adopt a very strict stance towards the new Greek government.
Is there any danger that the Greek government may be forced to come back and ask for yet more money?
I think that's unavoidable. They will have to do something. If everything goes according to plan, even the current debt as part of the second bailout agreement, including the second haircut, I think down the line there is still a third haircut if everything goes according to plan.
There was a sign that Germany might be a bit gentler off the pitch, even if it wasn't on the pitch on Friday, with Angela Merkel saying that there would be a stimulus for Europe, amounting to some 130 billion euros, 1% of the total value of the economy. That should make a difference, shouldn't it?
It should make a difference, though the details of the agreements are remain yet to be seen. I mean, where are they going to be spent? Are they going to be spent in the countries that are in need of growth, like Greece, Spain and Italy as well? If we include all the countries in problem, that amount of money is actually not a lot of money. If you invest that in Spain, Italy, Greece, Ireland and Portugal. A lot more money is required if you have to boost growth in all of these countries.
When you look at the Prime Minister and the Finance Minister being sick, you might think that was unfortunate if it felt like a really urgent situation. But we've been talking about the Greek crisis now for 3 years. It almost seems like it's not a crisis. When are they expected to be back in action? And will we have some sort of substantial progress when they are?
By being back in action, you mean lending money from the markets?
No, I mean talking to the Troika and off their sick beds.
I think the next couple of weeks things are going to start getting on again. They already got, by the Germans, a period of 2-3 months. The cuts which they were originally going to be applied in the summer, they're now being postponed for September. So there's these 2 or 3 months period of actually provided already to the Greek government. OK,
now what about Spain? Because there's obviously a situation there which is still bubbling away. When we're not talking about Greece, we end up talking about Spain. Now we're expecting the Spanish government to formally ask for cash to save its banks today, aren't we?
Yeah.
What do you think the sum is going to be like? Do you have any idea?
The sum, I think, is going to be a bit more than the audit, which was 60 to 70. I think it's going to be around 100 billion euros, which is similar amounts of money being lent to Portugal. I think it's 85 billion euros there. But now the Spanish they're quite careful with the terminology. They don't want to call it a bailout agreement, but for all intents and purposes, it is a bailout agreement, being there to support the liquidity of the banking sector. But again, my view is that this is not going to be enough. Down the line, a lot more money are going to be required for Spain as well.
Do you think this is why the Germans have not softened their stance against Greece, in that they know there's a queue of countries waiting for them to dip their hands in their pockets and help them out? And if they give way to Greece, they're going to have to adopt a softer tone as well to Spain, then Italy. I mean, in the City of London, no one wants to talk about Italy because of the size of the bailout would be impossible.
That's absolutely right. If Greece were to be provided with better terms, the Portuguese have unofficially, but they've started discussing about either better terms for their first bailout agreement. A couple of months ago, they were expected to actually ask a second bailout agreement on the basis that Greece got one. So you're absolutely right in that. We don't have any signs yet from the Irish authorities because
yes. I mean, you could see how they'd feel a little bit hard done by. They've had to accept the word bailout, humiliation with downgrades, and austerity that has actually been implemented.
Yeah. Whereas this is not the case in Spain, for example. So from an Irish point of view, the double standards being imposed by Germany, effectively.
OK, thank you very much for coming in to explain all that. Dr. Dimitrios Syrikos there from Manchester Metropolitan Business School.
Let's have a look at the markets now. Richard Hunter, Head of Equities at Hargreaves Lansdowne, is our markets guest this morning. Morning, Richard.
Morning.
Not much reaction in the wake of Friday's downgrade of the banks. I mean, it was almost as if the focus has slipped a bit more over the weekend to the American economy, which isn't performing. It's not firing on all cylinders as you would expect after all the money that's been chucked at it. And that's starting to be reflected, of course, in corporate news.
Yeah, that's right. I mean, one of the things that's kind of held things together, if you like, in investment terms over this year has been that in the US, to some extent in the UK, but in the US in particular, the blue chip companies are in fairly rude health. They've already long since done what governments have.
And that's helped underpin the market, isn't it? The fact that these companies are doing quite well, or at least matching expectations, that's kept the market up.
Absolutely. They've long since done what governments have yet to do, take a knife to their costs, try and generally make things more efficient. And in terms of first quarter earnings, that was starting to be reflected. However, obviously we're now coming to the end of June, so in early July we're going to start getting second quarter figures coming through the US corporates, and there's been a couple of individual companies, the likes of Procter & Gamble, for example, have recently said that their Q2 numbers might disappoint, and there's been 3 or 4 of those. So this underpinning to the market, which has been mainly the US, of course, but that then filters through to Europe and, of course, the UK, may just be pulled away slightly.
And, of course, Procter & Gamble is a major, not only a major international company, but it delivers a lot of household products, and some would say it's a reflection of what's going on in the US economy.
Well, absolutely right. Procter & Gamble was a global company, and, of course, as such, Europe is going to be one of its major markets, and it really is now coming to the stage where, whereas the man on the street in America might be saying, well, why does Europe affect us? This is actual proof positive that it does affect a lot of the US companies who, especially based on the weakness of their own local economy over the last few years have been looking to their more global economies to pick up that slack, and of course Europe can't do that at the moment.
And that banking downgrade on Friday, which was announced on Friday, I mean, a lot of people were expecting a bigger fallout than we actually saw. Has the market shrugged its shoulders and said, well, all right, that's expected, let's get on with it?
Well, firstly, I think it's fair to say a lot of that news has been trailed since sort of February. It's almost like driving, as you know, driving in the rear view mirror. It's looking backwards, it's not looking forwards. I think the other positive thing that came out of it, if you look at the likes of Morgan Stanley, for example, they were only downgraded by 1 or 2 notches less than the market was expecting. So in some perverse way, it was actually taken as reasonably positive.
The bad news was better than expected, in other words.
Exactly. So it actually turned out to be fairly neutral when the news was announced.
But when you see banks like JP Morgan losing $3 billion on international markets, you realise just how volatile it is and whether these banks have got it right.
Yeah, that's right. And of course, it's not just about the trading losses that we've heard about, but equally, there's still this ongoing situation. Is it a question of the banks not wanting to lend, or is it a question of the demand not being there? Either, as we've seen from a couple of stories coming out just over a couple of days, some of these sort of stimulus schemes just aren't working at the moment. OK,
so run through the numbers now. The FTSE 100 finished down 52 at 5,513 last week. The DAX, that was down 80 at 6,263 in Frankfurt, and the Dow, that finished up 67 at 12,640. Short time ago in Tokyo, the Nikkei 225 down 33 at 8,765. And on the currency markets, the pound's down 0.1% against the dollar at $1.55.8, and against the euro, the pound's up 0.25% at €1.24.3, making a euro worth 80.5 pence. Richard, sit tight, we'll come back and look at the papers.
This is a download from the BBC. To download other programmes or for more information, go online
bbc.co.uk/5live.
Branches of Natwest, RBS and Ulster Bank branches will extend their opening hours again today as the fallout from last week's computer glitch continues. More than 1,000 branches opened their doors for the first time on a Sunday yesterday to help customers deal with the problems it's caused, and they'll open again between 8 a.m. and 7 p.m. today. Millions of customers have been affected by the system's failure, which began when a routine software update went wrong. The bank's message boards are full of complaints about the problems, with many customers out of pocket. We've also heard from you, Mickey, you'll have seen some of these texts coming in. One says, I'm in HSBC. I didn't get paid last Friday because my company banks with NatWest, so it's not just their customers affected.
Yeah, Chris in Newbury says, this is a nightmare. Our wages paid through NatWest still haven't been paid.
Stuart from Torquay, I bank with Santander. However, my company bank with NatWest. That's left 50-plus employees without any wages. So how reliable are the computer systems we all rely on for our everyday banking? Will this get sorted out? Could it happen again? Here's what Susan Allen said. She's Director of Customer Services at the RBS Group over the weekend.
We are working really hard to fix this. We're making some progress, but we're still not out of the woods. Please contact us if you're a customer or a non-customer affected. Please call our call centres or come into one of our branches. We have been able to help many customers. We will do everything we can to help in these situations.
Peter McNamara is the Executive Chairman of Note Machine plc and a former Managing Director of Alliance Leicester, someone who knows the whole retail banking scene very well. Good morning, Peter.
Good morning.
Can you remember, in your experience, a technical problem as bad as this?
Well, all banks have these types of problems from time to time. Clearly, this is a very big one. What happens is, overnight, vast quantities of payments in and to from bank accounts are made up across the mainframe from other files. The systems these days are extremely complicated because of the parallel systems that work for internet-based customers' electronic payments, the support for point-of-sale terminals where customers use their cards, and obviously for ATMs and that type of activity. All of this requires a very complicated series of file updates overnight, usually, to bring up to speed the core banking system for each customer. What seems to have happened here is one of those or more than one of those files went wrong. You can then develop a number of problems that follow on from that, one of which is establishing how many customer files have been updated and how many haven't.
Yes.
So that you can, if you like, undo that and try to rerun the program. Now that can be a very complicated game.
But okay, it's complicated and it's technical. But the thing that worries me in what you're saying, Peter, is you're talking about one file, and the whole banking system just looks like it's tottering.
Well, yes, it could be a very major file, though, if it's got large numbers of payments into it in terms of people's salaries or payments away in terms of electronic payments to other banks. And you can see that the effect has spread from, to some extent, the Natwest Royal Bank of Scotland group to two other banks because of some payment failures that haven't got across to other banks. Now, all of that means that once one's gone wrong, there's a sort of, if you like, a sort of domino effect that you're running out of time for other updates to take place. Because to access the core file, for that point of time, it has to really complete the whole exercise and update the whole file and then move on to the next update.
Peter, I interviewed Susan Allen on Friday, the lady we heard from RBS a little bit earlier. She gave me the impression that the software problem had been resolved and this was all about catching up now. But this doesn't... I mean, what's coming through now is they haven't resolved it.
Well, it can be very difficult to understand exactly how much. If you've got a problem on a very, very large run that's updating millions of customer records, if some of them have updated and some haven't, you've got to avoid the problem of duplicated payments. You've got to avoid the problem of those bits that need to be reversed out and rerun. And then, as I say, you've had a subsequent failure of enough time to run other updates during the periods when the main files aren't being accessed.
Can't help thinking this all runs against the idea that technology is supposed to help make banks more efficient. I mean, Peter, we're talking about institutions here which have made billions of pounds of profits and handed out billions of pounds of profits in dividends. They're now using whatever money they get in to rebuild their balance sheets. But surely some money over the last 5 or 10 years should have been spent updating the systems so they weren't vulnerable like this.
I'm sure large amounts have, but inevitably what's happened over the last 40 or 50 years where banks have run computer systems is that they've become extraordinarily complicated. Just to imagine the programs you've got, it's rather like looking at the wiring diagram of a modern car times a few issues for the number of programs that run and update every night. And that's what makes it vulnerable. The problem is almost that when you try to improve a system, and it may have happened here, sometimes it causes these glitches.
Yeah, the more technologically advanced you are, the more, sorry to interrupt, but the more technologically advanced you are, the more difficult problems are to fix.
And the more vulnerable they come to this type of problem.
But look at what Matt Ellis is saying from Bath. I know it's not your fault here, Peter, but I'm just running this past you. My small, medium-sized business was unable to send our payroll because of the failure of a CHAPS payment, he says, via our client's NatWest account. Now we have to make a same-day payment into each employee's account to pay their wages, which costs both in time and money.
Yes, I'm certain that NatWest have been doing an awful lot to try and correct this problem. I'm certain that they should not get any additional charges as a result of recoveries from this problem. It'd be very, very surprising. They've gone to great endeavours to try and correct everything they can in these circumstances, for which you have to applaud them, even if the systems problem obviously created them.
Well, people will be applauding when it's over, probably,
indeed.
won't they?
But what the one critical thing for all customers to do is just to have a look at their accounts as soon as they're able to properly, and just make sure that nothing unusual has happened and that they haven't inadvertently incurred any charges. Okay. It's very unlikely, as I say, because the Royal Bank of Scotland have been going to great depths to stop that happening and reverse any charges.
Well, thank you very much for coming on and casting light on the story. Peter McNamara there from Note Machine.
Text there, Andy says, Old English proverb says, to err is human, to really foul things up takes a computer. Fair enough. Let's have a look at the financial pages now. Richard Hunter from Hargreaves Lansdowne is still with us. Richard, let's start with the Telegraph, which has research from the Bank of England, Bank for International Settlements, I should say, which says the Bank of England may be putting the economy at risk by persisting with low interest rates and money printing. It adds that 30% of global GDP, that's economic growth, a total of £11 trillion is being held by central banks.
And on the other hand, you've got the FT reporting that David Miles, who's one of the more dovish members of the MPC, wants to do more quantitative easing.
Yeah, I mean, certainly in terms of QE, this is the sort of reason that the Germans, for example, are very much opposed to this, because traditionally what QE can lead to is inflation, and certainly between the war, Germany got into a hyperinflation situation, which even today means that the nation is slightly sceptical about any sort of stimulative measures like this. I mean, on the interest rate fronts, as we mentioned a few moments ago, they're being kept at historic lows. And, of course, this report looks rather wider than just the UK. They say the Bank of England's been quite aggressive in what it's been doing, but we've only got to look at what the Fed's been doing in the States and, to some extent, the ECB as well. The interest rate situation is, of course, Some companies are choosing this environment to pay down debt and nothing else, as are some individuals. Governments, we're not absolutely sure. The idea of the low interest rates isn't so much that, of course, because any time you've got the two parts of the equation, one is growth and one is debt. And as much as anything, this is designed to establish growth rather than pay down debt.
But there is pressure growing. I mean, last week's Bank of England minutes showed that 4 people wanted to commit to more quantitative easing, 5 were against. Now, one of those that was for was the governor, Sir Mervyn King, and we had Andrew Sentence on 5 Live last week, and he said this quantitative easing is now a waste of time.
Well, it depends what it's used for. I mean, it's we've already had a slightly different thing in the States called Operation Twist, where they're basically trying to kind of change the interest rate curve at the long end, but one of the other things that's being discussed, and there's no reason why it couldn't in some way be introduced over here, is for QE not to be buying so much government assets as potentially other assets, such as shares, of course, which would then, in theory, have positive knock-on effects into the economy. But yes, there is also an argument is if you do QE3, how much of that £50 billion would actually go straight to workers intended?
Yeah. OK, Richard, good to hear from you again. Richard Hunter there from Hargreaves Lansdowne. It's 5:56.
Brian near Sandwich says, my mortgage should be going out today, but I've not been able to transfer the money to my current account. Lots of people having problems like that because of the RBS glitch. Now, here's another potential glitch for retailers, because yesterday was the second so-called quarter day of 2012. Quarter days are the 4 dates each year when most retailers pay their rent for the next 3 months. While the significance is obvious to the thousands of retailers around, there is extra emphasis around the quarter days when times are tough. And they're often also the trigger for calling administrators in, because the prospect of paying a lump sum looms on the horizon. Big high street names such as Game, Peacocks, Clinton Cars have all gone into administration, of course. David Kenningham is the Executive Director of the Commercial Real Estate Advisors, CBRE. David, do you think we will see more administrations this week?
I think it's unlikely. It's difficult to say precisely. I mean, the difficult market's been going on for some time, and as you've mentioned, we've already seen a number of the big names call in administrators, and I think the difficult market has seen those guys, fall by the wayside during that time. We're not anticipating any big announcements over the next few weeks anyway.
Have landlords been flexible about this? Have they been willing to listen to the retailers? Because after all, if one retailer goes down these days, they're not very likely to get another tenant, are they?
I think it's difficult for landlords, and landlords covers a huge range of potential parties, from major institutions and property companies through to many private individuals who are often somewhat stretched themselves in terms of bank debt, etc. So I think the landlords have helped where they can. I'm certain the retailers would say they haven't helped enough. There's always conflict between major landlords and major retailers on this point.
And it's a bit of a game of bluff as well, isn't it? Because the retailer can say, well, make a calculation based on how badly the landlord needs their business.
Absolutely. It's definitely a game of bluff. I mean, not all retailers that go looking for help are necessarily needing it desperately. So the landlords have to sort through those trying to get a better deal for themselves and those that they think they can help. There's also a view from the landlord's point of view is, who they should help. If they help them, are they just prolonging, the inevitable, or, is this retailer actually going to trade through the problems and come out the other side?
Yes. What do you think of the actual number who are vulnerable, though? I mean, according to one insolvency trade body, R3, it's saying 26% of retailers are caution or high risk, as it classifies them.
It's difficult to say. This country is full of retailers. Everywhere you go, you see shops, whether it's in your high street or suburban parades. And, there's a lot of confusion as to, what we're talking about when we talk about the number of shops available. So I think one of the issues that we've got to address is, is it the major retailers that are struggling, or is it some of the smaller ones? I suspect a lot of that will relate to some of the smaller retailers rather than the major ones.
Thank you very much. David Kenningham there from the Commercial Real Estate Advisors, CBRE. One more text here. Bailout Italy after last night? You've got to be joking. Conditions of any such bailout would include penalty clauses, so we'd lose the lot.
We'd miss.
On digital and online.
This is BBC Radio 5 Live.
5 Live's Wake Up to Money podcast. Delivered to your computer every weekday. For more information, Go online.
bbc.co.uk/5live.